Okay, y'all, life insurance, and everybody please look. I want to say this, there are two types of life insurance. All right, I'm going to put all the information up here and I'll talk about it so you kind of can look at this. There's two types. There's term and there's whole life. Let me explain the difference. Term insurance would be this. Would be like, okay, like at age 30, say I bought a $100,000 policy. It would actually be probably cheaper than this one, but I would pay $41.50 for like maybe 10 years. For 10 years, I would pay this a month. And if I die, my family would get $100,000. But at the end of 10 years, if I don't die, the insurance company keeps all the money, they keep it all, and I get nothing. And now if I want to keep the insurance, I have to move up into this category and pay this much for the next 10 years. And if I don't die, I now have to pay this much for the next 10 years. Because notice, you're more apt to die the older you get. That's term. Whole life works different. Whole life works like this here. So hey, just so that you know, like say I buy this policy and that's the price. I will pay $41.50 the rest of my life. Okay, completely the rest of my life. And what happens is if I die, my family will get $100,000. But let's say this happens. Okay, let's say like, well, actually this does happen. You also build some cash value up. Not much, but it gets older. So after 30 years, after paying on this policy for like 30 years, this is actually what happens. Like they send you a notice saying this here, hey, we will pay you $40,000 to cancel the policy right now because you've got some cash equity in it. Why would they pay me $40,000 to cancel that policy right now?
Probably because they'll keep the rest.
Well, what happens if I was to die? They'd have to pay how much? $100,000. So they might offer me $40,000 this year to cancel the policy because that's cheaper than paying my wife what? $100,000. So next year they may offer me $44,000. It does kind of go up. I mean, I don't know that it will never quite get there because they're trying to what? Save what? Money. But they take this money from you and they invest it, think that they will make, you know what I'm saying, that kind of money over the return. And that's the way whole life works. So on this one, if you're interested in purchasing, you don't have to put purchase in. Everybody got it? And y'all are in this age right here, so you'd be the top line as you're looking at this right here for the policy. Now I also want to mention this, everybody. 30 years ago, a policy like that would have bought 3 homes in the area that I was living in. And this was 5 times more than my salary. All right? Now this amount now will not pay off like the average home. And this is nowhere near, it might be twice the salaries that you have on the papers. Got it? Whereas this one out here might be the price of kind of like the homes in San Marcos, you know, out here. You know, anywhere from here to here, depending, I guess, where, you know, where they're at. And, you know, it might be 5 times the salary we have right now we're starting out. But guess what's going to happen in 30 years? You know, like 30 years ago, this might have been a hard amount to come up with. Now, is that particularly hard to come up with a month? So be aware, if you do a whole life, to think about those kind of things. You know, because what you're paying then, yeah, when I buy insurance like that back then, I thought I had a lot. Now it doesn't seem quite as much. So if I wanted to buy an additional policy, I would be where now? I would be somewhere out in here a month. A lot more what? Difficult and a lot more expensive. All right? To add to that. And plus then you have to have like the physicals and stuff like that. If you have things happen to you, like a heart attack, they're not going to even give you what? Those insurances because you're too big a risk to what? Not make it. Okay?